Most traders glance at an options chain, check the Greeks, maybe the probability of profit, and call it a day. But if you know how to read deeper, an options chain reveals far more, from hidden supply and demand, to market maker positioning, to clues about volatility expectations. In this video, we'll unpack how to read an options chain like a pro, the basics you already know. Let's start with the obvious. Strike prices, expiration dates, bid and ask. The building blocks of any chain. Add the Greeks. Delta, gamma, theta, vega. And you understand how each option moves. Add pop, probability of profit, and you get a rough statistical edge. These are table stakes. But pros look past them. The hidden signals. Here's where the chain gets interesting. Open interest. Tells you how many contracts exist. Large OI at specific strikes can hint at institutional positioning or magnet levels for expiration. Volume. Today's activity versus open interest. Unusual spikes can signal new bets or hedges. Put-call skew. Compare premiums between puts and calls. This reflects where traders see risk. Protection demand versus upside speculation. Implied volatility per strike, not just overall IV. Individual strikes carry information about how the market prices tail risks. Order flow and market maker footprints. A pro doesn't just read numbers, they read the story. If you see heavy volume at out-of-the-money puts with rising IV, it could be hedging activity. If calls light up far above current price, maybe speculative momentum traders are piling in. Market makers often adjust quotes based on where risk builds. Wide spreads at certain strikes? That's them signaling uncertainty or risk aversion. An options chain is like an X-ray of who's active in the market right now. How to put it together. So how do you actually use this information? Confirm setups. If you're bullish but volume is piling into puts, double-check your thesis. Spot sentiment. Use skew and open interest clusters to gauge where the crowd is leaning. Anticipate pinning. Heavy OI around round number strikes often acts like a magnet near expiration. Trade selection, tight spreads, healthy volume, and high OI make execution cleaner and safer. Reading a chain isn't just about choosing a strike. It's about seeing the battlefield before you step in. Common mistakes. A quick warning. Don't confuse activity with conviction. High volume might just be a hedge, not a directional bet. Open interest can build from spreads, not single-side exposure. POP and Greeks are only models. They don't predict outcomes, they just map risks. The goal is context, not certainty. To recap, beyond Greeks and POP, watch open interest, volume, skew, and strike-by-strike IV. Read the chain like a story. Who's active? Where are risks? And how are market makers reacting? Use it to confirm setups, gauge sentiment, and improve execution. Once you start reading chains this way, you'll see the market with a whole new lens. Thanks for joining us. If you found this breakdown useful, hit like, subscribe for more advanced strategies, and comment below. What's the first thing you look at on an options chain?